Welcome to a message from Legacy Financial. I'm sitting here with Robbie Kuhnheim, our Chief Investment Officer, and we're going to get a little message from the investment department today. Let's start with this. Robbie, today's day and age we could describe as some pretty unique, almost crazy times we're in. In this time, how do we look at the market at large?
You know, Mike, it's definitely been a very interesting year. We came into 2021 with just a lot of uncertainty, largely surrounding the global pandemic, coming out of COVID-19 in 2020. What we've actually seen so far here in 2021 is a year of strong economic growth, not just in the U.S., but internationally. And there has been some volatility there, but if we take a look, this past, just last month, October was the strongest month of equity returns in the U.S. for the year, and now we're looking at 20% plus equity returns. So it has been a very strong year despite all that uncertainty in the market right now. So at this point, sitting at market highs, all-time highs it is, we're cautiously optimistic. There is still room for this market to run. Corporate earnings numbers are coming out really strong. We have a record number of companies beating their earnings estimates in the S&P 500. So we're encouraged by that, but there are still risks in the market. People may not talk about it as much, but COVID-19 is still a risk to the market right now. We do have some things going on in China that could have the potential to rattle the markets. But again, any time in investing, there's always risks, there's always uncertainty. So again, we maintain our cautiously optimistic approach to investing right now.
It always seems so counter to how someone might feel emotionally, but that's a great way to look at it. Let's talk more specifically, Robbie, for a minute about not just do we look at the markets at large, but you also look at everyone's portfolios, and you guys in your department, you do certain things to adjust to the times or just to get on track. Maybe you could speak to that for a minute. What are some of the things you're doing in the investment department right now with our clients' portfolios?
Absolutely. One of the big things my department does is we go through all the news, all the data that you can find out there, and then we talk about this daily. But we really need to sift through that and figure out what is really just short-term noise, and does any of this actually represent something long-term? And if we come to the conclusion that something represents something long-term, then we have to start asking ourselves, are we positioned to take advantage of this, or are we positioned to be insulated from this if it's a risk? One of the big things we're looking at right now is interest rates. We've had some volatility in interest rates this year, but they are at fairly low levels. They're not quite at all-time lows that we saw in 2020, but they are still fairly low. So we're asking ourselves, can rates stay here for a super long time? We don't believe that. So now we have to look at the portfolios and say, how are we positioned? If we see a sudden spike in rates, are we in the proper position to be insulated from that? And so that's definitely something we're taking a hard look at this year, and then something we're hoping to wrap up with our models here very soon. To get even more specific on an operations side, with us heading into November and December, we really ramp up our efforts in tax loss harvesting. That's something else that we look at every day for opportunities, but we really double our efforts here at the end of the year to see if we can't help out our clients with their tax bill come 2022.
It seems like everywhere I go, if I'm at a party or I'm in my neighborhood, I get 3 or 4 of the same questions over and over again about what's going on today and how we should look at things. Of all the questions you hear, what's the most common question you're hearing today, and why don't you address that question?
So certainly that's top of mind for a lot of people, a lot of investors. It's getting a lot of attention because it is running hot right now. And it's not just running hot in the U.S., this is a global phenomenon right now. So what we're dealing with is a lot of supply chain issues, a labor shortage. Demand for so long has exceeded supply, and so subsequently prices have increased, and it's been at a more dramatic rate than we've seen in a very long time. If you listen to comments that out of the U.S. that come from the Fed, you look at Europe, comments that are coming out of the European Central Bank, everyone continues to call this transitory. They continue to expect this to moderate at some point in 2022. Initially, analysts were calling for mid-2022. Now they're saying possibly the end of 2022. Time will tell, whose forecast is correct. I think the important point there, though, is that the biggest hedge against inflation is owning equities in your portfolio. It's difficult, if not impossible, to time markets. It's difficult, if impossible, not to time inflation, when it'll move. So, again, we focus on the long term here, and of course we hold equities within our models.
Well, we really appreciate you, Robbie, and I just wanted everybody to get a chance to hear from him and hit all the things that they do every single day here working as a team. We thank you for tuning into this message from Legacy Financial, and we'll be back out at you again soon.